Okay, let's get this started. Look, this week has been absolutely massive, so it's only appropriate that my guest today is also a massive guest in the Bitcoin community, and he really doesn't need an introduction, so I won't give him one. So, without any more delay, welcome, Michael. How are you?
Awesome. Thanks for having me, Archie.
It's a pleasure. It's absolutely my pleasure. So, thanks for doing this on such short notice to making yourself available. Um, we've got a lot to talk about. This week has been so eventful, turbulent, volatile, absolutely everything. It seems like the entire market is under attack. Do you think this stems from an attack?
Um, I had I had random meetings with some investors, and one of my meetings with one of my investors, the investor starts by saying, "So, assuming the world doesn't end in nuclear war, what's the outlook for MicroStrategy?" and I shouldn't laugh, but I tell the story because I think it illustrates the overhang here, which is you've got a war on COVID, right? The Chinese shut down another province and shut down a Tesla factory, and that's freaking people out. So they're thinking maybe COVID hadn't gone away. And then you've got a war in the Ukraine, and we thought it was going to be short, and now it looks like it's going to be long and involved. And the perception is the West doesn't want the war to end. And then you had the Russian sanctions, and that kind of undermined everybody's confidence. And then you have the war, kind of the quasi Cold War with the Russians heating up. It's kind of like, well, we almost don't want the Russians to settle the Ukraine thing. We want to double or triple down. So that creates lots of political uncertainty, right? There's a ton of macro uncertainty, and then you've got the war on the currency. There's a war going on in Japan right now. They're pegging the interest rate for the 10 years at 25 basis points. So, in essence, it's yield curve control. And the Japanese central bank is printing infinite money to keep interest rates at zero. And that's the third largest currency. Meanwhile, if the Chinese shut down their economy and they print infinite money, that's the second largest. The next currency, the Europeans are embroiled in this conflict in Ukraine with the Russians, and they got the standoff of whether they buy or don't buy Russian oil and natural gas. So you've got geopolitical anxiety, you've got some monetary anxiety, and in the mix of that, the Federal Reserve has gone from buying assets and pegging interest rates low to not buying assets and raising interest rates. So I think that's kind of a perfect storm, and then you can layer on a few other political agendas that are all inflationary. So there's like we're in quite war and everything right now, and I think that spooked the market.
So I mean, just looking at the price of Bitcoin, if we use that as a proxy for market sentiment for Bitcoin, it's sort of been trending down since November, really. But late March, early April, we saw that accelerating a little bit. And last week, there was some really quite stupid, illogical articles printed about MicroStrategy being exposed to a margin call by journalists who are obviously deficient in math. Where did that come from? And what do you think is motivating those sorts of headlines?
I think that clickbait. Like I read the headlines that are kind of like clickbait. Like there's some kind of event that'll take place, and then you read it further, and then they say, well, maybe there isn't really an event. The fundamental issue here is we had about $5 billion of Bitcoin, and we decided to borrow $200 million against it. So the loan to value is 4%. So if you were looking at this in crypto terms, like when you do 2x leverage, that means you would take $5 billion and you would borrow $5 billion. That's 2x leverage. 10x leverage is I borrow $50 billion with $5 billion. 20x leverage is I borrow $100 billion with $5 billion. We did 1.04 leverage. Like one, it's like just the thinnest piece of leverage you could really imagine. We borrowed 4% of our collateral. And I think in our quarterly conference call it was like last week, we discussed this And somebody asked a question like, how does the collateral work? And we said, well, we initially posted 4x collateral, and so when it gets to 21,000, we'll have to post more collateral. And somewhere around along the line, someone decided that was a margin call, and then they decided that was a liquidation. But like there are a lot of people that don't like Bitcoin, and so if you don't like Bitcoin, you don't like MicroStrategy, and then you want to write something negative. So the first negative stories were like when Bitcoin is below 30,000, MicroStrategy's average buy price, then we're like forced liquidated or something, which is just stupid. And then the second story is, well, if we can't have a forced liquidation at 30,000, when it gets to 21,000, they'll be forced liquidated, and that's also stupid. So I just think it's flattering, right? I'm getting lots of Twitter trolls that want to talk about the company or talk about me, and I feel like when Bitcoin traded down, like it's like you notice like everybody, the trolls come out of the basement when Bitcoin trades down, and
Mm.
when Bitcoin is trading up, they're meek as kittens. So the summary here is if Bitcoin trades to 3,500, we got to post some more collateral, and I'll divert some cash, or I'll mortgage the jet or something, or I'll do something. But until it gets to 4,000 a coin or less, all we just do is keep posting some of our existing collateral.
So you think
And
that's an
it's a totally
organic?
non-issue.
Sorry, you think that's an organic confluence of sort of ignorance and clickbait?
Um, yeah, I mean, I saw some clickbait articles from the mainstream media, and they said, "Oh, MicroStrategy says they face a margin call at 21,000," and you click a little bit further and you read the story, and it says, "Yeah," and the CFO noted that if it got to that, they have more collateral to post.
Yeah, I mean, because you're a public company, it's well known, what conditions you borrowed all that money to buy the Bitcoin on. So it's not like it's a mystery and some sort of secret. So I was really mystified as to where all these headlines came from. So I guess your explanation sheds quite a bit of light on that.
I think primarily it's just I'm a Twitter personality, and so there are the standards of journalistic integrity on Twitter are quite low, and the standards of most mainstream journalists aren't high. Most people don't have the attention span to read 4 pages or 2 pages,
do you
much
do you
less
get a do you get a
less
sense?
right go beyond that.
Sorry, Michael, go ahead. Go ahead.
Yeah, it's all published, but you just have to have the attention span to read all the things. When you read it, you'll realize that okay, we took out 1.04 leverage. Archie, I'll make one more point, which is it's almost I have a morbid fascination, and I'm kind of amused by this. But how many people would go to a bullfight if you said, well, the bullfighter's going to kill the bull, and the bull has no chance?
Hmm. Yeah,
And so
we're all
they
there to see
almost
it.
want the blood. They're hoping that the bull will win occasionally, and the bullfighter will get hit. And now you go from 10 people in the stands, right? Because if the bull can't win, it's just a slaughterhouse, and you couldn't sell tickets to a slaughterhouse, to 100,000 people if the bull couldn't win. So by actually writing these clickbait headlines, or it just amps up interest in MicroStrategy and me and Bitcoin dramatically, which I kind of find to be amusing.
Well, I'm sure there's a lot of people who revel in the suffering in others, and already we see, like you said, a lot of people hate Bitcoin and Bitcoiners. And sure, there are many people within the community who are insufferable at times. So we've seen those tweets come out now, reveling in the joy of declining Bitcoin price and crypto in general, where they're seeing blood on the streets. Um, oh gosh, I just had a question on the tip of my tongue and it's escaped me. So this Terra thing, this fiasco with Terra. Um, as soon as sort of that started unraveling, there were rumors that quickly came out, and quite elaborate ones, about the playbook that was used. Do you see any credibility to those sorts of rumors?
I don't pay much attention to them, and I don't know. I mean, it's all very opaque, right? I mean, the big takeaway from this is Terra is a security, and UST is a security, and if if you operate it like a security, you would normally have a bunch of accountants, a bunch of lawyers. You'd publish hundreds or thousands of pages of disclosures, and you would tell the world what the board of directors is, what's the management team, what are the reserves, what are the processes, the protocols. You'd have accountants, you'd have risk controls. You'd have transparency, you'd have reporting, and everybody would understand what's going on, at least in the back, to drive the security. But because this is kind of treated like a decentralized network, none of those controls were in place. And so when it blows up, you don't know why it blew up and who's responsible. Nobody knows how much capital they had or reserves they had, et cetera. And I would just contrast that to, say, MicroStrategy, where if you really read this rumor, you can just go to our website. We have thousands of pages of investment disclosures. You can read the terms of the first convert, the second convert, the junk bond. You can read the terms of the Silvergate loan. You can look at the management presentations that are recorded. You could see the auditors. You could see the 10K. You can read 10Ks for the last 22 years, right? I've been a public company officer for 96 quarters. You can find 96 10Ks that are on file. Read them all. Have your own opinion. Thousands and thousands of lines. So I don't think it really much matters, whether someone attacked it and wrecked it or whether it was the free market or whatever. I mean, I'm not invested in crypto tokens. It's kind of sad for people that are invested in it, but most important takeaway, Archie, is it's like if I pull up Coin Market Cap right now, let's see. And I look at the upper left, it says there are 19,419 cryptos. Okay, well, I know there's one that's a property that's decentralized, which is called Bitcoin. And there might be a debate about like half a dozen forks of Bitcoin and whether they are or they are not decentralized. And then the rest of the 19,407 or whatever the number is, they're all securities. Right? They're all securities, right? Which means that they're all unregistered securities and they're opaque and nobody knows. They've all got management teams. They've all got foundations. They've all got ICOs. They've all got pre-mines. They've all got protocols. There's stuff going on. It may work. Someone may wreck it. You trade them at your own peril, right? And I think that a lot of people don't understand this, but I think that the Terra implosion is just a reminder that in fact if someone can do something, right, then it's not decentralized. I can tell you for sure I don't have any control over Bitcoin, right? I can't do anything. I can't print more of it. I can't change the protocol. I have no interest in changing the protocol, but if I wanted to, I couldn't. Wouldn't know how to. And the only reason I would invest in it is because I'm reasonably certain that I can't change it. And hopefully this will educate an entire generation of crypto people into the merits of a truly decentralized crypto asset network and the difference between crypto property and a crypto security.
I guess, looking at the Twitter timeline, there are a lot of people who attribute the decline in UST and Luna in particular to the precipitous fall in Bitcoin's price over the last few days as well. And so I'm wondering now, okay, if one supposed stable coin meets its fate in this way, and just taking analogs from other markets where you see contagion, the butterfly flaps its wings in a small market, and before you know it, risk-averse investors suddenly look around and say, hey, who else is like this little market over here, this country here? Which other currency has that kind of weakness? And of course, we also have financial players who are very independent, well-funded, who are kind of like sharks. They sense the blood in the water, and they go and seek weaknesses. So I'm wondering, after seeing sort of Tether this morning, if I could almost say that they were under a little bit of scrutiny, slightly coming off the peg. I wonder if there's any potential for contagion from here on in, because we're still early in this. A lot of people think it's over, but these financial crises, when they happen, they don't play out in 1 or 2 days. They play out over weeks. So I guess that's my question to you. Do you think there's potential for contagion?
My opinion here is, if you're a Bitcoiner, you shouldn't be paying attention to the other cryptos. Archie, I think who cares? Like, who cares about Tether or Circle or the other contagion? I bought $4 billion of Bitcoin. I didn't ever touch a stable coin. So here's what I think. Uh, like, let's not be paranoid. This is not, the world is not all crypto. If you want to look at what's causing the weakness, you can look at Peloton stock crash. You can look at the crash of all the SPACs. They're all down 80%. You can look at the crash of the NASDAQ. You can look at Amazon stock, which has crashed. You can look at every stock. You can look at all sorts of things. You can look at the interest rate, the monetary policy of the Fed. I could probably point at 25 macroeconomic things that are taking place in the world that all just add up to anxiety. And, what's happened is the traders have discovered Bitcoin. Right now, they think it's a correlated asset. They think it's correlated to risk assets. And they think it's correlated with a higher volatility. So they're thinking, well, if Nasdaq trades down 1%, Bitcoin will trade down 3%. So I'm going to short Bitcoin to hedge out my tech portfolio. Or when they're getting all bearish, they'll think I'm just going to short Bitcoin because it's a risk asset. You've just got people trading it, and right now everybody's shorting risk assets. They're all kind of paranoid. With regard to the stable coins, everybody wants stable coins. The world wants them, right? The world wants trillions of dollars of stable coins, and that's why Tether exists and Circle exists. And that's why DAI exists, and that's why UST exists. Now, the challenge is they can't get the $1 trillion from JP Morgan. The president's working group kind of said they want FDIC approved banks to issue stable coins, but this has been a logjam in Congress and the Senate, and they can't get a decision. Senator Toomey has some legislation. Senator Lummis has some legislation. 2 weeks ago, if you'd asked me, I would have said it'll take till the middle of 2023 before they come up with anything, and no one's going to make any decision this year because nobody can agree. But I think that what happened with the meltdown of Luna and UST and all this, and the crypto crash, if you will, is it's put this right front and center of Janet Yellen and Gary Gensler and the Senate and the House of Representatives. And I think political consensus has built very rapidly in the past 72 hours that this needs to be accelerated. So let me say it a different way. Instead of, people could be negative. My opinion, if all the stable coins go to zero tomorrow, it's going to accelerate the migration to Bitcoin. It's going to accelerate the regulation that's going to legitimize the asset class. It'll be good for us. So your worst case is going to be good for Bitcoin. If it doesn't go to zero tomorrow, that's okay too. One way or the other, I think you can expect that legislation to provide clear guidelines for issuing stable coins is going to be fast-tracked. When Senator Toomey asked Janet Yellen about this 2 days ago, yesterday or 2 days ago, it literally is like just right now, he said, "You think we can get this done this year?" And she said, "I would think it would be appropriate to get it done this year." And I think that the Congress was slowing down this because they couldn't agree amongst themselves. Like there was a view that the administration shouldn't do that much because they might hurt the retail investor. Gensler said someone's going to get hurt, and we should lay down clear lines. The crypto exchanges should be regulated, and most of these tokens are securities. And then you had Congress saying, well, Mr. Gensler, Chairman Gensler, don't go too fast. You might hurt the retail investor. And then you had a little fight over, is it FDIC banks or federally chartered banks or state banks, or should it be money transfer agents that can issue stable coins, or should we do nothing, right? And then you have the crypto lobby that have been basically lobbying against clear guidelines to come out of the SEC or out of the administration. They want a more permissive environment. And I think that it's pretty clear now that what would be really best for Bitcoin is if we define digital currency versus digital security versus digital property with bright lines, if there was a law and if there was clear regulatory guidelines, because then you'll have an avalanche of institutional capital flow into stable coins, and you'll have an avalanche of institutional capital flow into Bitcoin. and it'll probably be a big shakeout. Well, how many of the 19,000 crypto security tokens will exist? Right? Maybe there's a massive shakeout. There really should be a shakeout, and ultimately that eliminates confusion. Because I think that right now Bitcoin is undermined by guilt by association with all the other securities, and there wasn't political consensus to move forward. I think that the Congress was fighting the administration on this a bit, and I think that this meltdown of Luna will create consensus that we need to move forward faster. So
So that
rather than focus on the negative, which is there more contagion coming, I would say focus on the positive, which is the contagion you've seen has created a consensus to move forward with clear regulation, which is going to be good. It's going to move the asset class from being a $1 trillion asset class to a $10 trillion asset class. And we can't move forward without clarifying the definition of a security versus a currency versus a property in the eyes of the banks and the institutional investors and the politicians and the regulators.
so I agree with everything you've said, actually. So, I thank you for those very elaborate answers as well. But I want to take you up on something you mentioned with respect to individual tech stocks. Sure, they are subjected to, macro headwinds like every other asset class as well. But they're not really a pathway into Bitcoin and the broader crypto community, crypto asset class as well. So when we have the prospect of contagion from one stable coin to another, clearly the factor that you identified with respect to guilt by association, it plays, it looms large on the horizon, sure, but there's also a fact that funds flow through those, and there's the issue of confidence as well in the broader so-called crypto community. So I just wonder whether or not, we've seen Bitcoin. I would attribute Bitcoin's precipitous decline in the last couple of days to the uncertainty around UST, and I wonder if that did spread out to other stable coins. While I agree with you that in the longer term, that's going to be the bushfire that sort of clears the ecosystem of a lot of garbage and then allows green shoots to emerge, perhaps a stronger consensus on legislation as well. I just wonder what that path dependency is and how people can mitigate those risks for themselves. Do you have anything to add on that?
I, I think that a lot of people in crypto focus too much on crypto and not enough on macro. Look, today silver is crashing, gold is down, the 30-year bond and the 10-year bond are up. It's a massive risk-off day. Nasdaq is down, the S&P is down, right? And people are worried about China shutting down, a war in Europe, and the Federal Reserve cranking interest rates through the roof. And all of those things, I think, dwarf the impact of Luna and Terra, and they dwarf the impact of Tether. I think that it's fun to talk about it, but it really is, kind of inconsequential. I mean, at the end of the day, you know, do people? This would shock me. You think anybody in the U.S. is actually using Tether to buy Bitcoin? Because no institution is. No legitimate institutional buyer anywhere in the world is using Tether to buy Bitcoin. Tether's primary significance is for offshore crypto exchange clearance and settlement. So, it's really critical to the crypto economy of all the other crypto staking coins and the crypto exchanges, since every intelligent Bitcoin holder is buying Bitcoin and holding it. We don't need Tether. I mean, it's interesting, but again, if it were to crash, it would have a disproportionate impact on the other cryptos and the crypto exchanges and the security tokens. And if it has an impact on Bitcoin, it'll be short term.
Yeah, but to push
In the
back
near
on that,
term,
Bitcoin is a global market. So while I appreciate that in the United States is a significant and perhaps the largest player at the moment, Bitcoin is a global market that's affected by global issues. And when you've got something like Tether that has, as you pointed out, I'm not aware of what their market share is in terms of activity around the world, but shall we say it's a non-US, predominantly a
Archie,
non-US
why do you care
financial.
about Tether? What does it matter? I thought you're doing Bitcoin stuff.
No, no, I am, but
It really
I'm
doesn't
concerned how
matter. I
I'm
mean, if
concerned
Tether
about.
goes to zero,
Yeah.
then Bitcoin will trade down for some short period of time, and then it will trade back up again.
So that's
Tether
what I
is
was
not
getting
going to
at.
impact Bitcoin, right? Bitcoin is Bitcoin.
Okay, so
Tether
that's
is
what I'm getting at.
just a stable coin used by offshore exchanges. Like there isn't any public institution or public company that is even allowed to use Tether. It's non-compliant, right? You can't even use it. It's offshore exchanges that are settling with each other in dollars. But anyway, I
Okay,
don't
okay.
care. I'm not concerned. If it goes to zero, it'll be good for us. If it doesn't go to zero, it'll be fine for us. The significance of what's happened in the past week is that you can expect stablecoin regulation to get accelerated in the US, and that's good for us.
Okay, so a lot of people listening to this are saying, okay, we don't quite have the diamond hands that Michael has thanks to his financing arrangements. And so that's sort of the thing I was getting to. Sure, there might be short-term risk. And I wanted to sort of touch upon how you might suggest others from a personal point of view could mitigate those risks for themselves. So, for example, myself, I've taken a lot of inspiration from the financial model that you've used at MicroStrategy to purchase Bitcoin. So I do have some debt, which is sort of long dated and not dependent on the price of Bitcoin for any repayments or anything like that, any sort of viability. So it's completely independent of the Bitcoin price. It's long dated. And so any short term fluctuation it doesn't really affect my ability to finance that loan. So that was kind of what I was getting at. I can ride out that short-term effect, but you're not denying that it will have a significant short-term effect, are you?
Again, I'm not here to FUD Tether, right?
Yeah, nor am I. Nor am I.
Like the point, you want to worry about something, worry about COVID, worry about nuclear war, worry about other wars, worry about political policy, worry about medical policy, worry about manufacturing policy. There's a million other things you can worry about. Worry about getting hit by a car while walking across the street. I just think that, we need to stop like fixating upon one thing called a stable coin that you may or may not like. I think it's just misleading.
So
If we switch to something more constructive, if people are concerned about how how you move forward, well, the answer is, should you borrow against your Bitcoin, you should ask yourself the question: can you survive an 80% drawdown? Right? I mean, Bill Miller held Amazon stock through 80% drawdowns. So did Jeff Bezos, right? Elon Musk has held a lot of Tesla stock through massive drawdowns. So if you can hold your Bitcoin position through an 80% drawdown, like you take a loan to value 4%, right? MicroStrategy can last through an 80% drawdown. We can last through a 90% drawdown, right? So I think that if you're leveraging yourself and you're taking out huge loans where a 10 or 20% drawdown wipes you out, right? Then you got anxiety. I wouldn't suggest that. And I think that I think the things that create anxiety is a mark to market loan, mark to market every day. That's a risk factor. I think if you post your Bitcoin on an exchange where they could force liquidate you, that's a risk factor. Like I wouldn't do that. Like I wouldn't put $1 billion of Bitcoin on somebody else's exchange and then want to wake up one day where I found out Bitcoin traded down 80%. They sold all my Bitcoin at 80% loss and I have nothing. And then it trades back up 60%.
yeah,
That's
so
why you don't want to post your Bitcoin on an exchange. Like
yeah,
when we did our deal, we posted some Bitcoin as collateral, but we have it in cold storage. Silvergate doesn't have it. So I'm never going to wake up one morning and have Silvergate say Bitcoin traded down for 5 minutes and it traded back up. So we sold all your Bitcoin at a loss to you. Sorry, you wrecked, right? That's not the way we do it, right? That's irresponsible. So my advice to anybody would be, you know, uh, is your balance sheet strong enough to take an 80% drawdown first? Second, do you have your Bitcoin in cold storage? You know, and third, if you have other debt, what you want is long-term debt. right? You want 10-year, 15-year, 30-year mortgages. Like a 2.5% 30-year mortgage is a pretty good idea. Especially, and the best debt is, I don't know why people beat up on me, right? In Twitter, I notice all these people like trolling me saying, oh, you asked people to borrow money to buy Bitcoin. Well, a year ago, you could have borrowed money for half the interest rate now. You could have got 2.5% mortgages or 2% mortgages if you locked in a mortgage a year ago. Smartest thing in the world to do. So I would say, borrowing money against real estate that doesn't get marked to market, that has a long duration, that has a low interest rate, is like a no-brainer. That's the smartest thing to do.
So you've got a
You know,
long-term view
and you
of.
can do a lot of that, right? Like, for example, if you had $1 million house, you could reasonably go up to loan to value 80% on a 30-year loan at 2.5% interest. And you're not going to get wrecked because the house is not going to get assessed down by the bank. Oftentimes, the mortgage doesn't even have a provision like to market, right? So you can borrow 80% loan to value against real estate and be very comfortable with that debt. On the other hand, I would never borrow 80% loan to value against Bitcoin, right? Because a 20% drawdown wipes you out, right? Your margin called. And I wouldn't post the Bitcoin if I could avoid it. And of course, what real leverage is when I go ahead and I go 5-to-1 levered, and that means that I borrowed $5 million against 1 million, and when Bitcoin trades down 19-20%, I lose the entire million, right? So I wouldn't do that, but that, keep in mind what that is, right? When you're actually borrowing at 5x leverage, you would be borrowing $25 billion against a $5 billion position instead of $200 million. So 5x leverage is 100 times as much leverage as MicroStrategy put on, right? So thin layers of leverage against a volatile asset, but heavier leverage against a non-volatile property, especially if the government is subsidizing the loan and if it's a long-term loan and it's not marked to market.
So your debt at MicroStrategy, I think from memory, it's what, 5 or 6 year terms. Do you sort of date your risk assessment or your direct your attention towards risk along similar time frames as well? So if something's a 1 year risk, you just don't consider that an issue?
Yeah, I mean, I don't, I've said before, and I don't really think you ought to buy Bitcoin if you can't hold the investment for 4 years, right? I mean, 10 years is the right time frame. 100 years is the perfect time frame. 4 years is kind of the minimum time frame. Like, if I was giving advice to someone about how to think about money, I would say figure out what you got to spend in the next month and hold the next month of expenditures in the local currency that is the unit of the bill, right? If I live in Argentina and I got rent to pay in pesos, I have to have 1 month worth of pesos. Then take the next 2 to 12 months and then flip that to a strong currency like the dollar. If I lived in Argentina, I'd have a month of pesos. I'd have maybe a quarter to a few quarters up to 1 year of dollars. And then everything beyond that, I would, if, from 1 year to 4 years, if you want to be real conservative, you have a hedged property, like something which is hedged that can't go to zero, but it's not going to go to infinity. And beyond 4 years, I think you kind of want to have the best property in the world. And then beyond 4 years, you've got three types of property, I think, that are reasonable and defensible. You've got digital property in the form of Bitcoin, so one portion digital property. Then you've got companies, a company that you operate, or you want to own a corporation, you want to own a digital monopoly like Apple or Google. Some company that has a monopoly that where even if the government fails, the company won't fail. Like, you can more easily imagine like 100 governments in the world failing before you can imagine Google or Apple failing. That, like, the United States government could even fail easier than Apple and Google. It's a bizarre thing, right? You could imagine the U.S. breaking into three pieces, but you can't imagine all the people in the three parts of the country giving up their iPhones. And If I gave you $500 billion and said recreate Apple, you couldn't do it. So Apple will probably go on beyond Canada or Australia or Japan, right? They could fail before Apple would fail. So that's the second form of really hot, strong property. You own some kind of digital monopoly that can raise prices that everybody needs, that no one can get rid of, that's kind of close to oxygen. And then the third form of property is like trophy real estate, like the house you live in. If you have a house you're going to live in the rest of your life, then you're going to always have value for that. And otherwise, super trophy real estate that's scarce, desirable, that an affluent, intelligent person will want to buy from you in a decade. So if you're totally Bitcoin maximalist, then I'm like 100% Bitcoin. But even I'm 100% Bitcoin, but I'm still going to have a house to live in. I just might put debt against it, right?
Hmm.
You might own some, but you might own some big tech stocks. It depends. Everybody can figure out what their mix is, but those are the three logical assets to hold for the long term. And the question of the near term is, okay, well, do you need 1 month, 1 year's supply of cash or 1 month supply of cash? It's obvious. You want to be real extreme. If you lived in Venezuela, you'd have 1 day worth of bolivars. You might have 1 month worth of pesos or real. You'd have like a few months to a year worth of dollars. And then everything else has got to be invested. And of course, this gets really simple because, they can't buy the big tech stocks in Venezuela. So if you can't buy Apple and Google and Microsoft, which I would acknowledge are monopolies, right? Microsoft will be around long after 82 countries are gone, right? At least whatever the successor is. If you can't buy those, then, well, what can you buy? You can buy Bitcoin. Bitcoin is your digital monopoly monetary network that anybody can buy. And then, like if you're committed to living in Argentina or Venezuela for the next 100 years, then I guess you're going to own your ranch or own your beach house or own your whatever, right? If you trust the government, and if you don't think you have to flee or move, and if you're not worried about taxes. But the problem with all these other things, right, are it's hard to get your hand on securities. 75, 80% of the world can't buy securities trading on the NASDAQ. And it's hard to carry your property with you when you got to leave. And it's easy for someone to seize it by eminent domain or tax it or impair it, right? They could put rent control on your house in California if it's a second house. So Bitcoin clearly is my favorite form of property for the long term, and that's how I would think about managing your portfolio.
Earlier on, you sort of touched upon how Bitcoin can get stronger from all this market turbulence, and you mentioned regulation. And I wonder, do you think regulators have a preference to move first on stable coins or Bitcoin to fully regulate it and sort of entrench it within the institutional landscape?
Okay. I think that some people in the Bitcoin community think regulation is bad, but the bottom line is Bitcoin is property. It's already regulated. And the regulation you needed was to determine whether it's property or currency. It was designated as property by the IRS in 2014. So we're done, right? That's it. That's the regulation. There's the lack of regulation in the crypto industry is hurting Bitcoin more than it's helping it. The lack of regulation has been helping stable coins and crypto securities, and in fact all the competitors to Bitcoin in the space. So regulation is going to be good for Bitcoin by far. And the first thing they'll regulate is stable coins because there's a massive demand for stable coins, right? Everybody on earth wants the dollar. The Chinese want the dollar, the Japanese want the dollar, the South Americans want the dollar, everybody wants the dollar. They want the dollar on digital rails. That's why they buy Tether. That's why they buy Circle. They want the dollar, right? It's not spreading. I think we went from 5 billion to 200 billion in stablecoin. The real demand is trillions, and it's been crippled because in order to hold the stablecoin, you have to trust the counterparty, and you have a lot of imperfect issuers, right? You have Tether, which is somewhat opaque. You have DAI and UST. They're algorithmic with ineffable, like opaque risk that you couldn't really ascertain. You have Circle, which is the most transparent, but it's not a bank, right? It's and there's still like this uncertainty. So I think that they will move first on stable coins, and they should move first on stable coins because there's a multi-trillion-dollar demand for stable coins. That is, and the stable coins are kind of like the backhaul energy network for the rest of the cryptos. And of course, stable coins are kind of the killer asset for global remittance, for consumer remittance, and also corporate remittance, and also settlement. And so there's an obvious big demand. There's also an obvious benefit to the United States dollar. The US dollar is the global reserve currency of the world on the 20th century rails of credit cards and banks and ACH and FedWire. But it would be much better if the US dollar was the digital reserve currency of the world, running on Lightning, right? Running on any crypto network, running on any internet, right? If you could transfer $87 on WhatsApp from here to another WhatsApp address in a split second for free, then that would be beneficial to the dollar. The dollar's the winner. The dollar is going to ripple everywhere in the world. All the other currencies are weak. People in a heartbeat will swap their pesos for the dollar if they're allowed to. They'll swap every currency in Africa, every currency in Asia, every currency in South America will all be swapped for dollars if people could easily do it in a trustworthy way. So that's the big opportunity. The question is, do we need digital securities? That's a much bigger question, right? It's unclear, right? There's a big debate over the use case and the value proposition. Most of the value proposition that you see in the other cryptos, like the crypto platforms and the utility tokens, like DeFi, NFTs, you can, Citadel can offer DeFi, and so could, a regulated institution. I mean, anybody, Coinbase could offer DeFi in the US on their website. In theory, any financial actor could offer it. Apple Computer and Google could. The reason they don't is because it's outside of regs. It's non-compliant. A public company can't do it because, in essence, it's against the law. That's the reason those applications aren't spreading, because they're outside of the regs. And so if you want to provide applications that are not compliant, then maybe you can exist in an offshore crypto, gray zone. But that's 1% to 5% of the market opportunity. So I think that if you boil down this industry and listen to what the regulators have said, I think what they've said, this is Gary Gensler, this is Janet Yellen, this is the White House, this is anyone that's studied it. They're going to say this: Satoshi's innovation is real. The creation of a decentralized network to transfer value without a trusted intermediary, that is an innovation. That is Bitcoin. That is property. We're not going to regulate that as a security. It's not a security, it's property. So that's the first thing they'll agree on. The second thing they'll agree on is that the world wants digital currency in the form of stable coins. They want a USD type token, and there's a massive demand. They'll agree on that. Then they'll say, well, it's kind of risky to let entrepreneurs offshore, issue these things, right? The Luna example being an illustration of why it's risky. $34 billion goes to zero in a couple of days. Then the third thing they'll say is they agree that moving stuff 24/7, 365 at the speed of light for free is good, right? That's useful. Everybody agrees on that. And the fourth thing they'll agree on is that some of these things are securities and there ought to be disclosures, right? And so that's what the regulators think. Right now, they haven't given people a very clear fast track to be a compliant digital currency. And they haven't given them a fast track or a clear track to being a digital security other than the traditional method. The traditional method is very expensive, Archie. The traditional method is you spend, I think I spent a year and a half getting ready to go public. It's like you do a year and a half, 2 years, you have to have 3 years of audits, there's a lot of work you have to do to go public. So the traditional method is expensive. Is there going to be a fast track method? Well, it's unclear. Like what corners are you going to cut or what are you going to cut in order to make it cheaper to go public? And I think they haven't given people a bright line test to prove that they're a property or a commodity rather than a security. They've just given people the Howey test. But the position of Gensler is, hey man, the Howey test is settled law, and you can go read it. It's very obvious and clear. It's, you know, if a group of people make an investment of money and expectation of profit depending upon the efforts of others, it's a security. Full stop. Right? If there's an ICO, it's a security. If there's pre-mine, there's a security. If there's a central governing group, it's a security, right? He's been very clear about that. If there's a staking token, it's a security. Okay, so it's not complicated. It's just that there's a lot of people in the industry that, you know, have a vested interest in not understanding
it. So I rather agree with that, and just one of your conversations quickly flashed before my eyes. One of your recent conversations with someone else, let's just say. So, so what is this going to do for institutions? Because, you know, for them, regulation is really important, and I'm wondering, do they take the recent events as a sort of lesson to stay away, or do they look at the price contraction as an opportunity that they've already done their homework, their due diligence, and they understand that Bitcoin has periods of volatility like this, and that it actually isn't anything to do with Bitcoin. It's precipitated by broader factors.
You know, this is why you need your laser eyes, Archie.
Well, I've got
Because
them. I've got them.
and you do. And this is me just preaching to the cyber hornets. It's if you've got your eyes on the horizon and you're focused, then you realize this is all good. This is all good for Bitcoin. The acceleration of regulation is good for Bitcoin. There's a wall of money that can't come into the asset until everything is clarified. And so the way it gets clarified is through some of these events. And if you're short-term focused, if you're focused upon the last, 5 minutes or 5 days, then you just get anxiety ridden. So let me give you an example. If you look at my stock right now, it's traded 3.8 million shares so far today. So if you actually do the math, it's traded like 650 million, $700 million. And that's like 7 times the normal volume. It's 7x the normal volume. Okay, you want to be negative? Oh my, someone's selling it. You want to be positive? Oh, people are buying it 7 times more than they were. Okay, what's going on right now is a maturing of the asset class, and massive pools of capital are being pulled into this space. And I think it's a great thing for Bitcoin. Right?
Well,
Bitcoin is
yeah,
trading too. It's all going to be good, because the thing that's the danger is not when people are buying or selling your asset. The danger is they're ignoring your asset.
I rather agree with you. I'm trying to elicit your elaborate and very thoughtful answers rather than just merely ask questions where we disagree. Because I think it's a really important for people to hear them from you, actually, rather than just me tweeting about them. Because a lot of these things that you're saying, I have tweeted about them. The narratives, I concur wholeheartedly with them as well. But you do provide some insight that I don't have any experience of or any knowledge of. So it's when I ask a question, it's not because I disagree with it. I'm just trying to get the best out of you, Michael.
For the record, I'm not beating up on you. I love you.
No, it's all good.
Okay.
Yeah.
Look, there's some points that are worth making right now. Like, why don't look at NASDAQ? It's showing 11,200. If you roll the clock back to when MicroStrategy bought Bitcoin, NASDAQ was higher. Okay, so like, if I go back to August 11th, right, 2020, on August 11th, NASDAQ was only 10,782. Okay, so it's like creeped forward 2 or 3%. in that entire time frame, and Bitcoin is, has gone to 29,000 from what was 11,800. And I pointed this out in my tweet this morning. They allow other people, they allow the trolls or the pessimists to control and define the narrative. But if you zoom out and you focus on the big picture, if you had to make a decision in the summer of 2020 as to what you're going to buy, Bitcoin yields 150% from that point. Silver fails 17%. It falls 17% over this time period. Gold falls 9% over this time period. The Nasdaq's only up 5% from August of 2020 to now. The S&P is up 18%, but the money supply is up 19%. So a diversified portfolio of scarce desirable equities is just tracking the money supply. The CPI is 11%, but that's understating the true inflation. The PPI is 33%. And what's the highest quality property? It's like US homes. They're up 28%. Okay, and then again, what's close to Bitcoin? The only thing you can find that's anywhere close to Bitcoin's performance as an inflation hedge in the last 18 months is the commodities index. If you go look at the Dow Jones Commodities Index, DJCI, I think, it's like up 92%, which makes sense. It's like stuff that the government can't completely print more of, right, is getting more expensive. And so when you step back and you look at the big picture, right, you see that over a mid and a long frame, there's no better place to be. Every other, what are you going to do? Buy Peloton stock, right? You would have got destroyed. Go check the price of Amazon in the summer of 2020 versus today, right? There's no safe haven, right? Gold and silver are destroyed. Bonds are destroyed. Okay, so if you could roll the clock back 2 years and do anything, right? Yeah, you could buy some shit coin, but we know what happens with the shit coins, right?
Yeah.
They're not institutional asset classes. So in this particular case, you can see that the one legitimate asset that's really working is Bitcoin. It's got volatility, and Archie, I think the volatility is, because the cross collateralization with all the other crypto assets and the lack of regulatory clarity. So it doesn't help us, that people are selling Luna and, and they're buying Bitcoin and selling Bitcoin and all that cross collateralization conjoins Bitcoin to the other cryptos. And the fact that the other cryptos trade with thin liquidity, with thin information, with massive leverage offshore, I think that's been a net negative for Bitcoin. Right? It's kind of like, we're kind of slimed by that association. So yeah, that's bad. But, what's your choice? I could either buy Bitcoin and accept the imperfections and the immaturity of the asset class, or I could buy gold and I would have lost 10% of my money instead of getting 150% gain. So, of course, I would rather take the imperfect right answer than hold out until we perfected it. Now, what's going to perfect Bitcoin? Well, what's going to perfect Bitcoin is clarity of who's the regulator. When they regulate the crypto exchanges, that'll help Bitcoin. When the SEC gets these exchanges regulated, when they regulate the DeFi exchanges, that'll help Bitcoin. When they regulate the stable coins, that'll help Bitcoin. When they clamp down on all the unregistered securities in the crypto industry, that'll help Bitcoin. When people aren't trading at 20-to-1 leverage offshore, right, with a cross-collateralized token, that gets them another 5x or 10x, it'll help Bitcoin. When the SEC approves a spot ETF, it'll help Bitcoin. When the FASB fixes the accounting, and FASB just voted 7-0 yesterday to make that a formal project, that'll help Bitcoin, reforming the accounting. When the FDIC gives clear guidance about how banks can hold Bitcoin, that'll help Bitcoin, right? The reason I did the Silvergate loan is not because I needed the money. It's because I wanted to legitimize and institutionalize Bitcoin banking And I want to make it clear, right? I want to make it clear that you can borrow against Bitcoin and normalize it so that other publicly traded companies and other large Bitcoin holders also know that it's possible. And I wanted to bring the spreads in, and I wanted to make sure that I educated the market. So yeah, if anybody else is holding $1 billion of Bitcoin on their balance sheet, I would say, yeah, go to Silvergate and borrow $40 million and take a loan to value 4% at 3% interest. It's good for you. It's good for them. It's good for the industry. So the normalization of the asset class, good for Bitcoin, right? And each of these things in turn, they all represent milestones on the journey from being an offshore entrepreneurial embryonic industry to being an onshore institutionalized asset class, an institutionalized market. You know, like it or not, the companies and the organizations that need to enter the space are big banks. We need, you know, we're now getting coverage from Bank of America, from Citigroup, from, you know, JP Morgan, right? We need Goldman Sachs and Morgan Stanley and these big banks to get comfortable with Bitcoin. And they're much more comfortable today than they were 12 months ago. We need public investors to invest in Bitcoin, right? And by the way, they are, right? I mean, the fact that you know, you've got big institutions willing to actually trade 4 million MicroStrategy shares. That's, you know, $600 million or $700 million of trading, you know, in how many hours? 5.5 hours. The fact that they're willing to do that means that the asset class is maturing, right? We need public investors. We need public companies. We need public auditors. We need lawyers. We need bankers, right? We need the media. We need them all to cover it, right? And they are, right? It's CNBC's covering it. Maybe the crypto crash, but it's on CNBC, and that means Bloomberg's talking about it, and that means New York Times writes a story about it today, and the Wall Street Journal is going to write a story about it. And Archie, you remember like 18 months ago when people on Bitcoin Twitter used to lament that mainstream media wouldn't cover us? I do.
Well, it's certainly changed since then, and I noticed it when all the social media accounts started growing as well. And then before you knew it, when my account started growing, I noticed actually, and you know, I don't want to sound arrogant, but I started noticing that when something took off on my timeline, within half an hour, multiple articles hitting Google using very similar wording on headlines, similar topics and focus as well. And often it was something that I sort of found from 2 days ago. So it sort of escaped the mainstream attention regarding Bitcoin. But when they see that it's actually getting a lot of engagement on my timeline, it suddenly hits the media as well. So
You
they're
know,
looking
one
for
thing that,
content. They're looking for Bitcoin content because it gets engagement.
yeah, one thing that nobody is saying, oh, Bitcoin's gone to zero. Like they're not saying that. They're just debating when will the correlation with the Nasdaq break? When will it reverse? You know, what's the volatility? You know,
So
I've
I want to touch
described,
upon that. There's two narratives that are really important here.
yeah,
I think you commented on. One is the inflation hedge, and we know what the properties of Bitcoin are, and they're anti-inflationary. But because of its, I guess, path to maturity, and it's still in a stage of price discovery, shall we say, we're seeing quite a lot of volatility to the upside, and as a result, also to the downside. So we've seen in the last 2 months where we've had huge inflation prints that have coincided with Bitcoin, I guess, contracting as well. And so as a result, we've seen a lot of opportunistic posturing about mocking Bitcoin as an inflation hedge. So I guess I put that to you. You kind of touched on it with respect to your timeline for hedging inflation, but can you expand on that a little bit?
there's going to be a time lag, right? There's always going to be a time lag between when things take place in the macro economy and when they reflect themselves in the Bitcoin price. So the only way you get the 150% appreciation in Bitcoin over the past 18 months is to endure the volatility. and if you didn't have it, you wouldn't have had that kind of performance. And that's been the story of Bitcoin for the past decade, right? I mean, we can we can pull, all of the numbers and look at the 5-year numbers, the 10-year numbers. Bitcoin's outperforming everything over 5 years, over 10 years, over 2 years. So I don't think anybody should get really worked up over the fact that they don't get perfect performance over the course of a couple of days or a couple of weeks or even a couple of months. It's just too short.
Well, that's the thing that I've pointed out a number of times is that, as soon as the COVID crash happened and the Federal Reserve and various central banks around the world announced what their monetary response was going to be, all the Bitcoiners knew what was going to come with respect to inflation down the pike. And as a result, a lot of people took to Bitcoin and further invested, if they weren't all in anticipation of inflation. And since then, we've seen what was it, about 3,800 was the bottom of the COVID crash. And we've seen a high of 69,000, currently at 29,000. One could very reasonably argue that people who had invested all the way up until probably 26,000 have hedged their inflation. That we've already hedged our inflation, having invested in Bitcoin all the way up until those prices. So it's been effective for us. But I guess if you sort of were late to the party and you bought insurance when you needed it rather than in anticipation of an emergency, then you might be looking at it with a different view. The next narrative
If you're expecting a return in less than 4 years, right? You're a trader or a speculator. You're not even an investor. You gotta have at least a 4-year time horizon to call yourself an investor, and you need a 10-year time horizon to call yourself a saver. And there's some important stats here, Archie. Like the 5-year compound annual growth rate of Bitcoin is 75%. The 5-year annual compound growth rate of gold is 8%. The 5-year growth rate of the Nasdaq is 13%, and the S&P is 10%. So that tells a story over 5 years. And if you look at over 10 years, bonds have yielded nothing. Nasdaq is up 14% a year. S&P is up 11% a year. Gold is up 1% a year, and Bitcoin's up 137% a year. And I just gave you the 2-year number. If you wanted to not, I gave August 11th because that's when I bought $250 million worth of Bitcoin. But you go back to March, right? And the numbers are even more extreme. And at the end of the day, the price you pay to actually get that performance is to take a long view. I would just say anybody that doesn't want, if you want a guaranteed profit, in less than 4 years, you shouldn't be buying Bitcoin. You're a speculator / trader, but you're also kind of dreaming because there is nothing you can buy that'll give you a guaranteed profit in less than 4 years, right? They're all risk. Go ahead. What's your second question?
regarding correlation to the Nasdaq, and I guess I want to partner that up with anticipated increase in institutional adoption of Bitcoin, because if they're going to be sort of the largest pool of funds holding Bitcoin, and they're essentially the largest group of funds holding Nasdaq stocks as well, aren't they just going to further entrench that correlation?
No, I think that here's the way to think about this, right? There's 5 classes of investors. You've got the deniers like Charlie Munger that think it's tulip bulbs and Peter Schiff, and they're getting silenced because they're looking stupid and silly at this point. If the Secretary of the Treasury and the President of the United States and the head of the SEC think it's real and you think it's tulip bulbs, you're kind of out of the consensus. Then you've got the skeptics. That was Jamie Dimon and Ray Dalio a year ago, and they said it's too good to be true. The government will ban it. They're, of course, being silenced too, because if Janet Yellen gave a speech on April 7th saying we're not going to ban it, and if Gary Gensler says we're not going to ban it, and the President of the United States says we're not going to ban it, and it's not banned, they just look silly. So they've shut up. So anybody that's reasonably informed that spent a couple of hours on the subject is not a denier or a skeptic anymore. So now you've got traders, all the hedge fund people, they're like, well, it's an A-correlated asset or it's a correlated asset. Right now, they think it's a correlated asset with a 2 or 3x, lever on it. And so they trade it like that. And if it's a risk on day, they'll trade it up. If it's a risk off day, they'll trade it down. They're traders and you need them in the market. They're useful for things. The technocrats are just going to own big tech monopolies. That's the Bill Miller buying Amazon and holding for 20 years. That's like me holding, Apple and watching it go up by a factor of 20, or watching Facebook go up by a factor of 10 or 20. It's all the tech billionaires. Okay, it's not a long stretch for them to figure out that this is a monetary network. That's getting introduced. And then finally you got the maximalist. And the maximalist view is this is an instrument of economic empowerment, right? It's the greatest big tech idea, but it's also the greatest moral and imperative, and it's also the greatest economic imperative. And and it's the solution to a multi-hundred-trillion-dollar problem, and it's underappreciated. So I think right now what you've got is an avalanche of traders coming in the market, and the traders and the technocrats are bearish because if you're a conventional investor and you've got like 10 wars that you're worried about, why wouldn't you be bearish? They're worried about the monetary policy and the foreign policy and the domestic policy, and so they're in a bad mood right now. When they get bullish, it'll go the other way. And right now, like the modelers aren't really deep thinkers, right? Right. This takes us back to like my debate with Hedgeye. It's like you want a back tested model, you can back test the model, and if a gorilla walks out of a playground along with three kids and a puppy dog, you can correlate them all to be moving at the same trajectory, at the same time, and then conclude that they're all the same thing. But the puppy dog and the kindergarten kids and the gorilla, they're not the same thing. They just did the same thing while you were watching, based upon the numbers you were correlating. So yeah, you can correlate this stuff and say it looks like a risk asset on a back tested model. But if you break down the anatomy and you look at it, you realize it's not a risk asset. It's a risk off asset. It's not a company. It doesn't have a CEO. There's no board of directors. There's no product cycle. There's no supply chain. There's no headquarters. There's no employees to unionize. It's not the same thing as Google. It's a different thing, right? And so the statisticians that see the world through a statistical model think the gorilla and the puppy dog are the same thing because they're moving in the same direction at the same rate. And that will be the case until the gorilla sees something at once, right? And then you will realize that they are not the same thing. And I think that correlation between Bitcoin and risk assets will at some point break. And when it starts to break, like, for example, when you wake up and you find out that some nation bought $20 billion worth of Bitcoin, people will go, oh, crap, this is not the same as the other thing. And the price will double overnight. And then everybody on Twitter will be saying, I told you should have bought it when it was blank. And then everybody's going to be recriminating themselves and saying and being angry that they didn't do what they should have done, because the state will change immediately. And then people scratch their head and say, oh, yeah, I guess I should have realized that it was different than a risk asset, right? And so that's what I think. I think when it happens, at some point, right, two things happen. People get bullish on risk assets and they unwind their shorts. Or what happens is the thing decouples and the technocrats say, hey, this is actually different than what the traders think it is. Or the traders all of a sudden conclude that the correlation is zero. Or if the volatility changes or the leverage, when they say, oh, it looks like it's negatively correlated with 1x leverage, you see a totally different behavior in the market. And you can't say when that'll happen. But, I could tell you one thing. A gorilla is not a chihuahua, right? And eventually, right, reality will set in. And if you've got a long enough time frame, you'll get through it. If you've got a short time frame, you won't get through it. So the bottom line is you hodl. Don't get wiped out on the drawdowns. I don't think you get an 80% drawdown, by the way, but I think that the drawdowns get less and less over time. But don't get wiped out on the drawdown. Don't get distracted, and just let nature take its course, because there's a lot of people that need this. Right? It's right in front of their face, and I wouldn't bet on them all staying stupid or ignorant forever. That's a bad bet.
Yeah. I wanted to ask you, like, I have a theory that we're only just entering the steep part of the S curve, the adoption S curve. And I know that, you've lived, worked, and you've profited from two revolutions, the internet and the mobile wave that you've written on and you've invested heavily through as well. And so I'm wondering what sort of a time frame do you see before Bitcoin becomes ubiquitous, mainstream, uncontroversial as an investment asset?
I think it's right now between 2020 and 2024. That's the period when it rotates from being entrepreneurial to institutional. Right. By the end of the first Biden administration, I think you'll have about 90% of the regulatory clarity around stable coins, Bitcoin, crypto exchanges, digital property, digital securities. You won't have 100%, but you'll have like 85 to 90% in that 4 years. And then I think this is the decade, right? 2020 to 2030, when the decade of digital transformation of property, money, and energy. Right, this is the digital. It's the digital energy wave, if you will, and if you want to call the crypto wave, what is it? The crypto wave is really the transformation of property, money, capital, and energy. And when we get to 2030, right, we definitely have a billion or multiple billions, 1, 2, 3 billion people, at least a billion people that are in the crypto economy, that understand what Bitcoin is, and that uh, understand the distinction between a crypto property and a cryptocurrency. And then I think it'll kind of grow. It's a growth industry between 2030 and 2040. I think it's a hyper growth industry between 2020 and 2030. And between 2010 2020, it was embryonic, right? It was like it went from the billion to the trillion.
Okay, that's really interesting. That's faster than I thought you would say, actually. Um, FASB accounting. A lot of people ask me to ask you about that. Are you? I don't know if you're in a position to comment, but do you have any expectations of those outcomes? I mean, mark to market would probably be the most logical. Um, I'm
If they
assuming.
weren't going to do anything, they would have actually decided not to make it a project yesterday. So it would have been a bad thing if they had decided not to take it up as a formal matter. The fact that they took it up unanimously, I thought was very auspicious. The time frame I can't be sure of, but presumably 1 to 3 years, right? It's like when this happens. I wouldn't think it takes 5 years or 10 years. I wouldn't, it won't take a couple of months. It'll probably take longer than that. I think there's consensus across the board amongst everyone that's looked at it that we should move toward, the accounting standards should move toward fair value accounting. But there's tons of nuances. It's a very complicated subject, and I think they've got hundreds of nuances to consider, and so they'll probably be considering them. It's a deep subject. I can't see that. I can't see any outcome that isn't positive for Bitcoin.
Oh,
Right?
okay.
It can't be worse than it is right now. Right? Archie, we literally have the worst accounting you could have. I would have better accounting if I bought $1 billion of comic books right now, or $1 billion of modern art. If I bought $1 billion worth of peanut butter, right, and put it in a crate, it would be better accounting than the accounting that we have for digital assets right now. So it can't get worse, therefore it can only get better. I actually think they'll probably fix it in a decent way, because I'm optimistic on that regard, but it's not my decision. The Financial Accounting Standards Board is responsible for that, and they'll do it on their time schedule, subject to their professional standards.
I mean, it does seem like a grossly unfair policy to have anyway, that you can only mark the loss and you can't mark the profit in the future. Anyway, well, it's good to hear that you're quite optimistic about that we'll get a pretty good outcome with respect to Bitcoin.
I'm optimistic about the grayscale thing too, by the way.
Are
I
you?
feel that If the SEC was going to deny their application, they just would have denied it.
Oh,
And the fact that they, if you think about the fact pattern here, they denied every other spot ETF in a summary fashion. But in this case, they didn't deny it in a summary fashion. They actually invited the investment community to comment. And now they have thousands and thousands of investors on the record. And the fact pattern is there are billions of dollars at stake. There are thousands of investors very passionately interested in this. And now for the SEC to deny it, they would have to ignore what is going to be 5 to 10,000 letters from investors asking them to please grant this because it's worth $8-10 billion to the investors. So you tell me, if you were going to deny this, would you actually put 10,000 investors on record as disagreeing with you, or would you just have denied it?
yeah. I just wonder maybe they want to give the appearance of having given it due consideration.
We'll see. Nobody knows. I think it's more than 50% likely they'll grant it, but it's possible they'll deny it. It's possible. It's just, I think it's, the decision's coming in July. So if they do grant it, it would be auspicious. Again, I'm kind of an optimist.
Wow, that would be huge. Look, with respect to the ETF, I mean, we've got countries all over the world. I think it's about 8 or 10 of them with ETF products, spot Bitcoin ETF products. So it doesn't really make any sense that the SEC continues to say we're protecting investors when there are all sorts of avenues for investors to invest directly through exchanges. We've now got Fidelity, and I wanted to specifically ask you about the significance of Fidelity allowing employees to allocate up to 20% of their retirement savings accounts, what you guys call 401k. So,
Yeah.
yeah, perhaps I can open that up for comment.
Yeah, that's a good point. Look, I think there's so many bullish, auspicious things going on right now that are lost in all the sound and the fury of the crypto crash. But let me try to lay them out. The executive order in March was very auspicious. The Janet Yellen speech, April 7th, was very auspicious. The invitation to comment on the grayscale matter is very auspicious. Fidelity rolling out a 401k program to allow people to put Bitcoin in a 401k is very auspicious. It's a company with $11 trillion in assets, right? That's got millions and millions of clients. All that's very auspicious. I think that all of these, by the way, Bitcoin backed loans from Silvergate Bank, very auspicious. Right. What you have is the maturing of the entire asset class, and we're elevating this as a discussion item. This is being discussed in 18 different federal agencies. Now, even the negatives are positives. Right now, we're educating the EPA on how clean Bitcoin mining is. Now, we're going to be educating the Department of Labor on why Bitcoin is a good thing to put in a 401k. I actually drafted a fairly detailed letter with the help of my finance and legal team to go to the Department of Labor. It'll go out today or tomorrow, sometime soon, to answer their concerns about Bitcoin and why we think it's an ideal thing to offer as an option in a 401k plan. So, one thing I've said before is when you have a supersonic airplane, you create a shock wave and there's a sonic boom, and the pessimist says, oh, that plane is really loud. And the optimist and the technologist says, oh, we've created a miracle aircraft that goes faster than the speed of sound. It's a fit of genius. And the engineers are great, right? So focus upon the positive, which is Bitcoin is moving so fast through the economy right now that every agency's got to get their hands around it, right? And they're struggling with what it means. So I think the negatives are really positives, and the positives are positives, and they're all creating massive awareness and massive educational benefit. The 401k thing is just really huge, right? Bitcoin, as we know, is the ideal thing to put in a long-term retirement plan, and yet 401ks are very technical and they're regulated. Right. And so for us to build the infrastructure to allow thousands of companies and hundreds of millions of employees to funnel their pay into the Bitcoin ecosystem. That's really good work that needs to be done, right? It's just another part of like the Bitcoin banking, right? If you want the asset class to be matured, you need to be able to borrow against it. You need to be able to generate yield on it. You need to be able to put it into retirement funds. You need a security version of it. All of these things we need. You need the ETF. MicroStrategy is a security backed by Bitcoin, but it's not an ETF. We couldn't absorb $100 billion of capital flow into MicroStrategy, but an ETF could. An ETF is going to be, a much, much better on-ramp, right? And so this is kind of the boring work, the accounting, the FDIC guidance, the Treasury guidance, the 401k guidance. This is the boring work that needs to be done that takes time, takes a lot of communication, but we're winning right now, right? I mean, this is a great thing, right? This is incredible. It's incredibly courageous and shows great clarity that Fidelity is doing this, and you should be very happy about that. In the same way that it's very courageous, and shows extraordinary commitment that Grayscale is moving to convert a closed-end trust into a spot ETF. These are just really great things. I mean, I would start by thinking, I'm really delighted that Grayscale has the courage to do what they're doing and Fidelity has the courage to do what they're doing. And then after you're finished with that, you could say, oh, well, there's some pushback. And then you should say, yeah, but that means that everybody in the world is going to be paying attention to us and we get to educate the entire world. And ultimately, it's a good idea. And people will come around once they have the time and the information to understand why it's a good idea. So I feel really optimistic about that.
Yeah, I agree. I mean, I love the culture in Bitcoin for autonomy, independence, security, anonymity, and all the rest of that. But, everybody has different needs, different requirements for all of those things. And some people, they are quite comfortable to just go through their existing institutions. And I always say the starting point is exposure to the asset class. We need to make that as easy as possible. And then as the need arises or they're aware of the need for other things like privacy and security, autonomy and whatnot, once that initial adoption happens, it's much easier to move people up that sort of adoption curve towards the Bitcoin sort of core community values that are so sort of entrenched and have been built up over such a long time from the cypherpunk sort of heritage as well. So I think it's a really good development to see these large financial institutions get into the space. I'm absolutely positive about that. Earlier you mentioned that we don't talk about macro enough as Bitcoiners, and I wanted to get your view on the Fed and interest rates and how you anticipate that to affect sort of the intermediate or immediate and intermediate price action of Bitcoin. Do you think that's going to have a significant material effect on that?
Again, Archie, I'm not a trader. And I think that anybody in the Bitcoin community that fixates upon near-term trading, they're not really a maximalist. They're not even an investor. You're just a trader. And the problem being a trader, Archie, is you have to figure out the rational thing to do and then do the opposite of that. So you have to intentionally dumb yourself down to think like a trader. Because yeah, and so I don't really want to teach people to be traders because I don't want to teach you to be stupider than you otherwise would be. Like, for example, the interest rate's 75 basis points right now, and there's every indication that the true inflation rate is 15 to 20%. Okay, we're in a very inflationary economy, so if they raise interest rates 50 basis points, people start thinking that means the Fed is taking things seriously and then we don't need an inflation hedge and Bitcoin is inflation hedge, so they sell Bitcoin, but that's silly. And then they decide to sell Bitcoin and then they're worried about inflation. So the inflation numbers come out and they're higher than people expected. Okay, so if the inflation is higher than you expected, don't you think you need Bitcoin more? You would think, But so the inflation is higher than people expected, but then people assume that because inflation is higher than they expected, the Fed will raise interest rates faster than they expected, and that means that the risk assets will trade down, which means Bitcoins will trade down. And so they sell the solution to the problem, even as the problem looks like it's worse than they thought it was.
So
Okay,
I didn't ask
so
that. I didn't ask that question with trading in mind because I've also observed your Bitcoin purchases, and you're not a trader, but you're very opportunistic, aren't you?
no, I'm not opportunistic. I buy as soon as I have any money. I'm a dollar cost averager, except that I'm more like a dollar cost maximalist. If I have dollars, I buy Bitcoin. Right? There's nothing opportunistic about it other than the fact that I have the money, and so if I have the opportunity because I have money, but I'm not opportunistic in the sense that I'm waiting for a special entry point. Right?
Oh, okay.
I'm buying Bitcoin the way that you would buy dollars if you were in Argentina for the last 20 years. Like I'm just converting my weak currency into a strong asset whenever I have the opportunity because my time horizon is more than a year.
Do you really feel the same level of urgency as what you've just described?
I don't know what you mean by that. Well,
Well, you said you're
explain that.
buying Bitcoin like you're, someone who was in Argentina 20 years ago.
Yeah, I mean, the dollar is collapsing and the other currencies are collapsing faster, right? The negative real yield on bonds is minus 10 to 15%, right? So the point at a 7% inflation rate a year, you lose 99.7% of your wealth in 90 years. You lose 99.9% of your wealth in 100 years. That's the 7% inflation. We're running double to triple that right now. So I don't know. You can decide if that's urgent or not, but it seems to me that it's a problem.
Well,
You
it's
know,
very urgent for me. Just full disclosure, I'm
yeah.
not sure if you've caught any of my tweets, but I get paid in Bitcoin. I keep everything in Bitcoin, and I liquidate as I need to meet my expenses. So I am all in. I can't be any more all in than I am at the moment, and I'm expecting to buy all throughout this month and probably early next month as well. So um, I buy when I can, just like you. So I'm interested to that you gave the Argentina analogy, given your experience there and its history with monetary debasement as well. So I just wanted to just ask you on that. And yeah,
Well,
okay.
yeah, I think the U.S. dollar is the strongest currency, but it's clearly losing 10% plus, right? The PPI today wasn't it like 11%?
I didn't
Just this
catch it.
morning.
Yeah, I didn't
Yeah,
catch it.
the producer price index was 11%, and that's actually understates the rate at which the currency is losing value, right? The PPI over the last 18 months, from August 11th to today is 33%, according to Federal Reserve numbers, right? So the dollar is definitely losing purchasing power at a rate that's double or more the traditional rate. It could be triple. It's between double and triple. And every other currency in the world is collapsing faster, right? The yen, the ruble, all these others are going to collapse faster, right? There's nothing that I see that's going to be stronger than the dollar. So I just think a dollar cost averaging strategy or just a very persistent strategy is the right one. And if you don't feel comfortable just doing Bitcoin only, I say come up with a portfolio of properties, real estate property, corporate property, and digital property, and decide what your mix is going to be and convert currencies into properties, because all the currency derivatives are going to be losers, right? And a bond's a currency derivative. Commercial real estate that's capped at CPI is a currency derivative. You know, and currencies are currency derivatives, and value stocks are currency derivatives. Unless you've got a monopoly and you can raise your price with impunity to keep your cash flows growing faster than the rate of monetary expansion, you've got a currency derivative. It's either partial or complete. And what you want to do is find a property that's a trophy that has value unrelated to cash flows.
Just on these macro metrics, I think there's a broad consensus that the official numbers are understated, And I wonder, there are a lot of financial institutions and investors who have the resources, they've got the clout, the cunning, the acumen. What are they using to understand these dynamics? Are they using in-house proprietary calculations? Are they using something else? Like, I mean, I'm not a professional investor, so I don't invest resources into that sort of thing. So, I just look at the official numbers and I scoff at them. But what are they looking at? Do they have their own proprietary metrics that they take a
I
read
think a
of?
lot of they're all very conventional thinkers and they have conventional models and they use conventional metrics, right? So they're going to fixate upon the CPI and what was the expectation, and they'll trade versus the expectation, right?
Hmm.
And like it's like I don't want to teach you to think that way because I I think it's like the wrong thinking. So you could just waste a lot of time dumbing yourself down.
Yeah.
But I I think that this is why I said I said it tongue in cheek, but I said the market's really being set by people with more money than you, but less knowledge than you, right? They've got broken models and they're using conventional metrics, right? And they're fixated upon what is the real yield of a tip, bond or something, and they think that that somehow is a measure of inflation. It's like so they bought into a set of synthetic government metrics that are massaged, and then they're trading on the performance versus expectations of the synthetic distorted metrics. And they can trade with each other that way, and they can talk with each other that way, and they'll all nod. But none of it makes any sense at all, right? It's pretty obvious the real yield on a bond is minus 15 to 20%. But of course, they will say the real yield on the bond is minus 2%, and they'll all nod. They'll say, well, that implies this and that and the other thing. I just, the thing is, they have more money than you. So if people that have a busted model, if they think that they should sell Bitcoin because it's a risk asset, and if they think that such and such implies that risk assets are risk off, then they're going to do it and they'll overwhelm you because the people that understand Bitcoin are maximalists at this point, Archie, which means they're not in the market setting the price. Right, all the maximalists are all in, and they dollar cost average their free cash flows, or they just roll their free cash flows in when they get extra money from time to time. So the maximalists are not setting the price. The traders that don't really understand Bitcoin and the technocrats that are either bearish or bullish, right? They're either running scared or they're enthusiastic. They're setting the price, and I would say neither of them have the best model. The technocrats have a slightly better model, but the traders just have their back tested random models, and they look at whatever they look at, and they're all like grossly distorted metrics that if you think about them too much, they'll fry your brain. So I don't. The only significance of studying all of the synthetic conventional metrics is if you wanted to be a short-term trader. But I would say if we come back to my tweet today, my point is if you don't understand any of that and you bought Bitcoin, you got 149% return in the last 20 months. Okay. If you don't understand any of that, you don't trade it. Whole Bitcoin, you got 149% return. Everything else is a wipeout. And I don't think there's any active trader. Like, Archie, if you go and look at all the hedge fund people on Wall Street and all the risk on, risk off algorithmic traders, how many of them trading any kind of conventional assets are showing 100% ARR, like 100% annual return? I don't know many. And if you told me you did, I wouldn't believe you. But I mean, if you do, good luck. If you have proprietary algorithms and you can trade this stuff and generate 100% return on capital every year, then have at it. It's not me. Like, and it's nobody on this call, or very few people on this call, I think, have the ability to do that.
So you've pretty much bet your entire legacy on Bitcoin now. Is that how you see it?
I just think I'm doing the right thing. Archie, the journey I think is this, it's the first leg of the journey is you're working as hard as you can and you're making no progress, right? For a decade, you work as hard as you can, you generate $75 million a year in cash flow, but you lose $100 million in inflation losses on your balance sheet. And so you go backwards, right? That's when you're hardworking, but everything just seems out of reach. So that's frustration. The second part of the journey is when you realize that the reason that you can't succeed is because the money is collapsing and the currency is toxic and defective, and you're being bled to death by a well-meaning politician. And that's despondence, right? You're despondent and it's despair. The third part of the journey is I think that there might be a solution in this crypto asset called Bitcoin. I don't know, but I think there might be a solution. I'm going to try it, right? That's kind of adventure. And the fourth part of the journey is actually this is what I thought it was, and this is really a lot better than I thought it was, and everything else is a lot worse than I thought it was. And this really is the solution, and nothing else is. And now you're on a mission, right? I suppose that's just you might call that harmony or satisfaction, right? You just kind of you've reached the point where you know what the answer is, and you're just on a mission to spread the word. So I would say that I've gotten to stage 4, having gone through stage 1, 2, and 3, and that's everybody's journey, right? You got to go through.
When you first made the announcement of MicroStrategy's purchase, and subsequently, we've seen, I think it was Jack Dorsey's Square, and then Tesla's huge announcement as well. Did you notice a market change in the way that you were greeted by investors and peers about, or not greeted, but so much as their response, how they reflected back upon your actions with MicroStrategy? Did that change at all when you had seemingly more corporate support? You had the second and the third?
I mean, I think the last 2 years have been a journey, a transformational journey for the entire industry. If you roll the clock back to March of 2020, there was a cataclysmic event, like the asteroid hit, the pandemic, and that kind of scrambled everything we thought we knew about the world and opened up people's minds. When we decided to buy Bitcoin in August, I actually didn't realize that that we were going to be the biggest, most visible public investor into Bitcoin. It never occurred to me that there wasn't some other intelligent person putting $250 million into this because it was the obvious answer, right?
But, how did you feel when you realized that?
But it's still the answer, right? It's like I'm an engineer. People in the finance world and the economists, they don't have hard sciences, so they always want to equivocate and hedge their position, and they want to diversify because they don't want to take a position. But you have to choose aluminum for the plane, and you have to choose steel for the building, and you need to choose glass for the windows, and you need to use oil in an internal combustion engine. And there is an answer. There's a right shape. There's a right 2 + 2. There's an answer to 2 + 2. It's not a diversified answer. It's not a stochastic distribution of answers, right? It's an answer. The number. It's not E. It's not pi. It's 4, right?
Yeah.
And so when I got to it, I said, well, there's the answer. It's like there's no other good answer. So we're going to pursue this. And I think that the last 24 months have just been this journey, right? It was a big deal when Square made their Bitcoin purchase because that was the second major public company to endorse Bitcoin. It was a huge deal when Tesla did it because 3 points is, 3 points is a trend. And I think that Bitcoin really, it broke into the popular mainstream media on Elon Musk Day when Tesla announced they bought Bitcoin. That was a pretty big deal, like February 8th or something like that of 2021. And I think that when Biden won the election, that was a big deal. When the administration, when Janet Yellen and Gary Gensler came in, that was a big deal. As when Cynthia Lummis was elected to Senate, that was a big deal. I think that you've seen bit by bit, we keep seeing new milestones laid.
I guess what I'm
The
trying to sort of
executive order and the rest, and Jenny Owens' speech, they're all pretty big deals. And I'd say today people look at it as it's a legitimate asset class. And 24 months ago, they weren't sure what to think. I would say it was much more exotic then.
that's well and truly changed by now, going by your comments. One more thing I wanted to ask you before, perhaps, if you're still amenable to some questions at the end. Um, it might be a bit glib to ask, given all that we've discussed over this interview, but are you looking forward to any particular catalyst? Are you anticipating any?
Look, I've laid out about 20 so far, right? So you can see all the catalysts that are taking place. The forward catalysts are going to be SEC spot, ETF, FDIC guidance, FASB guidance, stable coin guidance, digital securities guidance, and the regulation of the crypto exchanges, right? All of those things are sitting in front of us.
Do you think they
I
will
think
be catalysts to action, though, rather than milestones? Because we've seen a lot of major milestones and seemingly big announcements made, but they haven't catalyzed any difference in adoption or price
Well,
action,
this is
like
the
a lot of
second
people.
answer. This is the second part of my answer, which is I think if you study, the answer is yeah, there will be, and the thing to understand is if you study returns in the S&P or study investment returns or look at the crypto returns, you realize that there's like 1, 2, 3 days of the year that are responsible for 80% or 90% of all your returns. Like if you miss the top 3 days, instead of getting 100% return, you get a 10% return. And if you miss the top 10 days, you get no return. So it's impossible to know when those days hit, but you'll wake up one day and you'll read a headline like such and such company bought $3 billion of Bitcoin, and it'll spike. Or maybe you'll read that the sovereign wealth fund of some country bought a ton of Bitcoin, and it'll spike. Or maybe you'll read that some country decided to put 10% of their treasury into Bitcoin, and it'll go from like 40,000 a coin to 100,000 a coin, and then it'll trade plus or minus 20% from there. And people will be like, well, that came out of nowhere, and so you're going to have those events, either a major investor that's going to flip and say, I've decided to sell half my gold and buy Bitcoin with it. And so when Ray Dalio puts $5 billion of a $100 billion fund into Bitcoin, that'll be a catalytic event. And I think that there's like 10,000 companies, 10,000 investors, and 10,000 institutional entities or governmental entities. Any one of those 30,000 entities can take $1 billion plus action. And I think that once you get 2 or 3 of those things, they kick off the next bull run. So I don't know which one from which direction. I pointed out that it's kind of like if you wanted to make $5 billion and you had 20 billion in capital, it's pretty easy to see how you can do that, right? If you were just to go and buy $2 or $3 billion worth and explain why you did it, and you had permanent capital, right? If you're an insurance company with a $500 billion balance sheet. So there are lots of entities that can do it. The only reason they need is they just want the money. I think that it's a matter of time before someone bends over to pick up $1 billion that's sitting on the pavement. And if you're a country, like let's take a country like the Emirates or Kuwait or Saudi Arabia, right? These people are sitting on $500 billion of treasury assets. If you're holding $100 billion of sovereign debt, it's costing you $20 billion a year to hold it in real wealth loss. So you're going to pay $100 billion of your taxpayers or citizens' money over 5 years to be conventional, right? So there's $100 billion cost. So if you were a country and you said, I don't want to pay $100 billion, I'm going to flip to a Bitcoin standard or quasi standard. Instead of paying 100 billion, you would make 200 billion. It's a $300 billion difference. Okay, who will do it? Someone with courage and clarity. But look, Barry Silbert had courage when he launched GBTC, and Abigail Johnson had courage when she launched Fidelity Digital Assets. Jack Dorsey had courage, when he put Block in the middle of Bitcoin. Elon Musk had courage when he bought, 1.5, probably $2 billion of Bitcoin.
Michael
People have
Saylor.
courage. Someone's going to do it, right? You can't bet against the human race deciding to do it, right? At some point, the head of the Central African Republic has a PhD in math and can read the white paper and figure this out. So, to your point, there's going to be these catalytic events. They're going to come when you least expect them. When I woke up and I read that, Square had bought Bitcoin, I didn't expect that. When PayPal plugged Bitcoin into PayPal, I didn't expect that. Bitcoin went from 12,000 to 20,000 in a matter of weeks after that announcement. So stuff will happen when you least expect it, and that's why it's good not to be too cute. Right? It's like someone can go like, you're so stupid. You could have bought it at 30,000 instead of 33,000 or 38,000. But the problem is,
I don't care.
when you wake up, it's going to double, and then you're not going to be able to buy it.
Yeah.
And so, you just got to decide what you want to hold. And the best idea, and Warren Buffett would say this, and any good investor would say this, and it's shown by all the statistics, you should just stay invested in the market that you believe in and wait. Because if you try to trade the market, you will most likely fail. All these active hedge fund managers, they fail, right? All the traders are failing. By the time you calculate the cost of buying insurance on the volatility, it offsets the alpha in the portfolio. It just doesn't work. And so if you're a mere mortal, and I consider myself to be a mere mortal, I think figure out where you think the world is going over the next 5 to 10 years and buy as much of that thing as you choose to buy, and then just wait, and don't let the bastards get you down, right? Don't let all the trolls and all the sound and all the fury cause you to take your eye off the prize. Just stay focused. And then they're all dissipating energy, Archie. All the traders are dissipating energy. They're buying, like you're buying Apple to sell Apple, to buy Amazon, to sell Amazon, to buy it again. They're generating tax bills. They're generating trading fees. Right? They're going to get caught short on the wrong side of the trade when the market rips up. And then you're going to buy back in at double or triple the price you paid. And at the end of the day, we know how this game ends. Like 10, 20, 30 years out, you're going to want to own 1/21 millionth of all the money in the network, in the world. You're going to want to own that. So you have a chance to buy it now. Right.
Might as well do
buy
it.
as much as you care to.
Michael, you've
I think
been
we're running out of time. Any
I was
final
just going to
things
say
that we should cover to wrap this up?
I think you've been more than generous with your time so far. I just want to thank you so much for coming on at such short notice and spending so much time with us, allowing me to ask all sorts of nonsense. And you've been fantastic, actually. And I've been an admirer of you since I've been in the Bitcoin space, and I've watched what you've done very, very closely, and have used your model for MicroStrategy on a personal level to set myself up in a way that can be sustainable as well. So it's helping me ape in and buy more Bitcoin, and I look forward to buying even more. So from me to you, thank you so much for everything that you've done, and thank you so much for this Spaces interview as well. I really appreciate it.
Let me just say one final word to everybody on the call. Thank you for dialing in. And my final thoughts are, every fundamental thing that's happened in Bitcoin for the past 24 months has been auspicious, has been awesome. And there are lots of things that have happened that I wouldn't have expected, but on the margin, if you had told me all these things would happen back in August or July, I would have bought more. That's the bottom line. I wouldn't have bought less. I would have bought more. And if I look forward and look at everything that is happening, every parade of horrible, everything that people speculate might be a bad thing, I think is a good thing, right? If all the cryptos crash and if all the stable coins crash and if every other parade of horrible happens, it's probably going to accelerate the adoption of Bitcoin. And if it doesn't, Bitcoin's gonna continue to get adopted. And so I feel very comfortable with where we are right now. And I think that if you can get beyond the short term headlines and the short term anxiety, that is being induced by all the clickbait in the mainstream media, I think you just kind of settle in and hodl. Everybody on television has to generate a crisis every minute, otherwise you turn off the TV. And I'll read articles I read articles, or I go on YouTube and I read something where it says Michael Saylor is going to sell his Bitcoin if this happens, and I clench up and I click on it. I'm like, holy crap! What did I say about selling Bitcoin? And then they start talking about how great Bitcoin is, and I'm like, oh, they got me, clickbait. It's
Yeah.
like they even managed to get me. Like they get me to click on myself to see when I'm going to sell the Bitcoin. And the point is, everybody out there wants you to click. They want you to read their tweet. They want you to disagree, right? And
Yeah. Michael, one last thing. We know Bitcoin is the best. It's the number one digital asset. What's second best?